Meet Mr. Stickman. One day, someone introduced him to the world of Forex trading. They told him it's a business without rent, a business where you don't need to create and market your product, a business without employees to pay and manage. All he needed was a cell phone or a laptop and a reputable CFD broker. Excited by the idea, Mr. Stickman jumped in immediately. No training, no strategy, no risk management. He started trading right away. And just like many beginners, his entire account was wiped out. According to ESMA, as many as 89% of retail CFD traders lose their whole account. That's 9 out of 10 people. Most of them lose because they lack proper education, have no risk management, and can't control their emotions or greed. But what about the 11%? They are disciplined traders, those who invested time in learning how the business works, practiced patiently, and treated trading like a skill and not gambling. So what exactly is Forex trading? In the simplest explanation, Forex is the buying and selling of currencies. Banks, institutions, and individual traders attempt to profit from the rise and fall of currency prices. A currency's value changes every second because of real-world economic activities like international trade, tourism, foreign investments, banking, global remittances, and even speculative activity from large financial institutions. These constant movements are the reason why Forex is the largest financial market in the world, with over $7 trillion traded every single day. Modern Forex trading comes from the post-World War II era, under the Bretton Woods system, where currencies were pegged to the US dollar, and the dollar was backed by gold at $35 per ounce. This system created stability in global trade. But in 1971, the Nixon shock happened. President Richard Nixon ended the dollar's convertibility to gold, which collapsed the Bretton Woods system and opened the door to floating exchange rates. By 1973, currencies began to move freely based on market supply and demand, creating the volatile, opportunity-rich Forex environment we have today. During the 70s and 80s, the Forex market grew rapidly, but it was mainly accessible only to large banks, corporations, and institutions. In the early 1990s, CFDs were created by Brian Keelan and John Wood at UBS Warburg in London as a way for institutions to hedge their equity exposure. CFDs allowed them to speculate on price movements without owning the actual asset and without dealing with taxes or ownership issues. A CFD is simply a contract between a trader and a broker to exchange the difference in price from the time a trade is opened to the time it is closed. With the rise of the internet in the late 90s and early 2000s, CFDs became popular among retail traders. However, in some countries like the United States, CFD trading is restricted for retail traders due to regulatory concerns. So why did Forex CFD trading become so popular among retail traders like you and me? Simple. It offers a level of accessibility and flexibility that traditional markets can't match. Let me break it down in the simplest way possible. First, you don't need a huge amount of money to start. Because of leverage, even a small capital can give you access to larger positions in the market. Of course, leverage increases both profits and risks, but for many beginners, it makes trading more reachable. Second, the Forex market runs 24 hours a day, 5 days a week. That means you can trade before work, after work, and even late at night. You can trade any time that fits your schedule. It's perfect for people who want flexibility without giving up their daily routine. Third, you don't need to own the actual currency. With CFDs, you simply speculate on price movements. If the market goes up, you can buy. If the market goes down, you can sell. Either direction gives you an opportunity to profit, and that's something traditional investing doesn't always offer. Fourth, the Forex market is incredibly liquid. It's the biggest financial market in the world. Because of that, your trades open and close fast, and you see your profits and losses in real time. No long waiting, no delays, just immediate results. And lastly, everything happens online. You can trade from your phone, tablet, or laptop. No offices, no paperwork, no physical products to manage, just a trading platform, an internet connection, and your focus. That's why retail traders love Forex CFDs due to small capital, flexible schedule, opportunities in both rising and falling markets, instant execution, and unmatched convenience. But remember, easy access doesn't mean easy success. Trading is a business, and like any business, it requires skill, patience, and the right education.